Hi, it's Dave. In this video, I chat with Nic Carter, whose specialty and focus is Bitcoin. He was Fidelity's first crypto asset analyst and is a co-founder of CoinMetrics, an analytics company gathering crypto data for financial institutions. He's currently a partner at Castle Island Ventures, where he invests in companies building on public blockchains. I was first referred to Nic by my last Bitcoin guest, Yassine from ARK Invest, and what follows is a great conversation through the philosophy of Bitcoin, potential risks, and how Bitcoin fits into our ever-changing world. I've added timestamps also in the video description below. All right, today I'm joined with Nic Carter, and today we're going to talk about Bitcoin and actually a lot of different topics. I'm kind of fascinated by Nic's background. He is the founder of CoinMetrics. He's a general partner at Castle Island Ventures. He was one of the first, or the first, I think, Fidelity's crypto analyst. And he's been investing in early stage startups that are focusing on blockchains. And I'm curious, I guess, first off, Nic, can you kind of tell me like where and when this whole kind of focus on blockchain, on Bitcoin, on crypto, when it started for you and kind of how it's developed?
Yeah. Thanks for having me on, Dave. I appreciate it. So I could probably trace it back to about 2013 is when I really started to pay attention to Bitcoin. And at that time, there were a handful of altcoins as well. And the first thing I did was I tried to mine an alternative cryptocurrency called Dogecoin, which, probably many people are familiar with these days, just for the entertainment value. And I really liked the idea of spending electricity on something and getting a unit of currency in return. And so I did that for a few weeks in college, and I think lost the hard drive that I mined those coins on. I don't think they're worth very much anyway. And so to me, it was just a curiosity. It wasn't a big political or ideological movement at the beginning. And then over the years, I saw Bitcoin growing from strength to strength, and it, had the big collapse in 2014, 15, and then it started to recover. And that's when I realized, hey, this thing is actually sticking around. It's failing to die, because in 2014, Mt. Gox went down, the suicide hotline was posted on the Bitcoin subreddit. It was really kind of a dark time for Bitcoiners. And when it started finding a new strength and entering a really new epoch in sort of 2015, 2016, that's when I thought to myself, hey, there's actually really something meaningful and enduring here. And I started to look more deeply into the sort of philosophical underpinnings, looking a little bit into Austrian economics. So, I sort of came into that school of thinking from Bitcoin, as opposed to a lot of people who start out as, libertarians or have sympathies with the Austrian school of economics and find Bitcoin that way. For me, it was the total opposite. And then in 2016, I went to business school, and I realized there was a sort of crypto industry, and there are opportunities to make your mark in that industry. And so after business school, I joined Fidelity as a dedicated sort of crypto asset analyst, and it all kind of snowballed out of control from there. So that was really how I got started in the industry.
That's fascinating. Where did you go to business school? Curious.
University of Edinburgh in Scotland.
Oh, Scotland, cool. I mean, were you able to get a background that would help you to like analyze crypto and Bitcoin at all, or was it kind of more kind of old school kind of business school topics?
I had some professors that were sympathetic to the notion of blockchains, but it wasn't covered at all. The course material was really just focused on sort of prepping people for careers in equity research or investment banking. And I was the only one in the class that didn't want to go down that path. And I chose to write my dissertation on crypto asset governance models, comparing them to corporate governance. And it was this enormous ordeal because I had to convince the leadership of the business school to let me write about this newfangled crypto asset sector. And they really weren't keen on the idea. But in the end, that dissertation is actually what helped me end up at Fidelity, and a lot of people read it and actually still reference it to this day. I see it being posted a fair amount. And so, I'm really glad that they relented and let me write it. But yeah, to answer your question, no, it was me sort of evangelizing to my professors rather than the other way around.
And then I'm curious, like, what did you study in college?
My undergrad was philosophy, so
Okay.
mostly epistemology and sort of ethics was what I focused on.
Okay. Yeah, because one of the things that's kind of fascinated me about your bio that you have on your webpage is you add an element of like philosophy, and it's a different angle than just like Bitcoin as a pure investment, you know, Bitcoin price. There seems to be a lot more going on, you know, with your views on Bitcoin. One of your writings, you're saying Bitcoinism is an emergent political and economic philosophy. So this is going kind of deeper, combining strains of Austrian economics, libertarianism, and appreciation for strong property rights, contractarianism, and a philosophy of individual self-reliance. So, like, can you unpack that a bit? Like, what are you trying to get at
Yeah,
in terms of what Bitcoinism is?
that's quite the mouthful.
Yeah,
Yeah, but I love it when people quote my stuff back at me. But
I've got
yeah,
a few more
I
quotes actually. I'm curious about getting your opinion on.
great. I mean, the point, I think that was in a piece called "The Most Peaceful Revolution," if I'm not mistaken.
Yeah.
And the point I'm making there is that Bitcoin or Bitcoinism, which is the sort of philosophy, which is not, fully codified, it's not fully developed yet, but an emerging philosophy that supports Bitcoin. It's not solely a monetary movement, as you say. It's a political movement, and there are political views impregnated into Bitcoin. Now, I don't mean partisan views. I'm not saying right, left. I mean views about how society should be organized, from a largely monetary perspective, but it sort of carries over into the political domain. So, for instance, Bitcoin itself imposes this alternative system of property rights, which is not dependent on the state or courts or judges or police forces to enforce. It takes a very radically different approach. It says you're responsible for storing your keys, and if you can do that successfully, that is the final arbiter of who owns what, the transactions that are registered to the blockchain. And so that works regardless of your legal context. That works in failed states like Venezuela. It works in first world countries like here in the US. It's indifferent to the local political context. So it's not a replacement to, the system of property rights that we have here, which is enforced by the state and laws and courts and so on. It's an alternative, and depending on the context, it might be better or it might be worse. I would say the property rights system we have here in the US is generally speaking pretty fair, although not perfect. Generally speaking, pretty enforceable. You have recourse if something goes wrong or there's theft. But in somewhere like Venezuela, where not to harp on the Venezuelan example, where the local currency has been debased, it's not really a reliable way to store wealth at all. So if you were trying to denominate your savings in the bolivar, it wasn't exactly a reliable system, and it's sort of somewhat chaotic. It's probably quite hard to enforce contracts and agreements and so on. So in that case, you might actually prefer the assurances that a system like Bitcoin gives you, although it's not a complete replacement for, everything we take for granted here. So that's just one, element of that phrase of the passage that you quoted to me, is that, Bitcoin includes these normative views on what the world should look like, which is kind of embedded into the fabric of the system. And it's not necessarily explicit, but if you look at the writings of Satoshi and you think about how the system is constructed and you read some of the writings of the other earlier cypherpunks, this pattern kind of starts to emerge.
Do you think Bitcoin is compatible with the modern day idea of government as kind of the highest authority, the top of the hierarchy, the controller of, not just money, but in a sense, the guarantor of all rights in a sense. Like Bitcoin, it seems like in its essence is very revolutionary. And it seems like for Bitcoin to succeed, it means the notion of government and what government is and does will radically change. I mean, how do you kind of reconcile that
Yeah.
Bitcoin versus government Are they at odds, or do you see some like compatibility there?
Well, I certainly don't agree with the very commonly bandied about notion that Bitcoin somehow requires governments to collapse to succeed. Um, I think in a Bitcoinized world, where Bitcoin is sort of an asset of consequence and reaches its potential as a settlement network, the role of government in a monetary context will likely shrink to a certain degree because right now, the global reserve asset that people save their money in is US Treasuries, which is a government asset. And the global settlement network that everyone uses for transactions, almost everyone, is the sort of US dollar system as administered by the United States. And upholding the sanctity of that dollar system has informed the direction of our foreign policy adventures for kind of the last 7 years since World War II. So, that whole system is premised on the centrality of the dollar and the centrality of kind of US treasuries as this global asset that central banks save money in. So necessarily, I would say, if Bitcoin does reach its potential, it will impair that system somewhat or be or competitive with that system for sure. And in other states already, the imposition of Bitcoin and sort of other digital assets on crypto rails is already eroding the monetary privilege of certain governments that are doing a really bad job of safeguarding the wealth of their citizens. So in all these places where currency crises are occurring right now, Venezuela is the most high-profile example, but Argentina, Turkey, these are places where the local currency is being debased, or there's defaults occurring in Argentina, sovereign defaults. We see really vibrant crypto markets there. So people are looking for alternatives, whether it's a tokenized version of the dollar or whether it's Bitcoin or other crypto assets. So the success of the cryptocurrency phenomenon, I think, does impair the monetary privilege of the state to a certain degree. It's an alternative to, for instance, any of these really centralized digital currencies initiatives like China's DCEP, which, it would not allow for much individual liberty in transacting, presumably entails a lot of surveillance, a lot of harvesting of data. So as the world gets more digitized and as these central bank digital currencies are released and cash is sort of abolished, physical cash is abolished, I think there is a role for these non-state alternatives too, to give people the rights that they're sort of used to expressing with physical cash, for instance, as it sort of gets marginalized.
Mm-hmm. Got it. I will circle back on this topic. I think it's actually quite fascinating and important, but I want to dive into a little bit about what you put on your webpage about saying that you invest in anti-authoritarian technology. Can you kind of unpack that a bit? Like, what does that mean? And why is that important for you? And when did that kind of philosophy and that approach kind of take shape for you?
Well, I've been very lucky over the last few years to end up in a position where I can express my views through an investment philosophy, and I can do that with lots of leverage. Working in venture, you can be opinionated about the future directions of the world, and you can do so with capital and potentially, change the course of certain outcomes. And so I consider myself extremely lucky to be in this situation. And, I never really wanted to be in venture just for the sake of it, right? So if I had been working, my fund was focused on sort of direct to consumer retail products like, umbrellas or luggage companies, that wouldn't be particularly rewarding for me, right? So the only reason I really do what I do is to fund entrepreneurs and businesses that I think really deserve and need to be funded because they're doing something that I consider to be really important. And so right now, the direction of our fund is focusing on the public blockchain ecosystem. We think the existence of public blockchains is a public good. It provides, a system for people to store wealth and transact in, without discretion over who is allowed to use that system, who's excluded from the system. We perceive enormous challenges and problems with sort of established financial infrastructure. We sort of came from that world. Both myself and my partner, Matt Walsh of the fund, We were at Fidelity before this. So, the cracks are sort of beginning to show in the traditional bank system. And so the objective is to devote, this pool of capital to helping the founders that are building the alternatives to the system, in particular through public blockchains. So you could say blockchains are anti-authoritarian technology because they help dissidents. They help folks that are refugees, asylum seekers. And look, these systems are not perfect, but it is a way to store arbitrary amounts of value potentially in your brain by memorizing 12 words. And that is sort of a radically new thing. You couldn't really do that before. Digital bearer assets are absolutely going to tip the scales back towards in favor of the individual as opposed to the state or the financial system. So that is a classic example of an anti-authoritarian technology. Other technologies which privilege the individual as opposed to centralized power would be cryptography itself. Public key cryptography was kind of illegal to create in this country until the mid 90s. There was a huge war. This was the first crypto war, was about the right to use PGP, to use public key cryptography. And in the 70s, academics kind of discovered it in parallel to the NSA, and they started publishing it and writing about it. And the discussion and the dissemination of cryptography itself was criminalized. So over time, the state realized they couldn't suppress that signal and that information had to be free. And so, we won a new terrain for freedom by enabling us to create apps like Signal, for instance, and Telegram. And I think this conversation right now is probably being encrypted as well. So, that is a tremendously useful technology, and it's allowed a lot of great things to occur. Basically, the right to have privacy in a digital setting, conditional privacy.
I mean, do you think there is a crisis of where our personal liberties are at stake? And is that a reason or the reason why you're trying to invest in anti-authoritarian technology? Or what's the motivation, I'm saying, kind of behind all of that?
Sure. Well, I mean, most fundamentally, you could say I have some sort of general libertarian inclinations, a slight feeling that, it's very important to protect individual liberties in that, when the state tries to micromanage our lives, there's a great potential for things to go wrong. So that's sort of the general answer. But the more specific answer is, yes, I absolutely think there's a crisis right now where we are seeing the internet and sort of various new technologies like facial recognition. They give huge leverage, and sort of algorithmic censorship too. They give huge leverage to would-be tyrants. And a social credit system, an AI, facial recognition system, fully digitizing currency or electronic transactions, all of these things, consolidating everyone onto, these social networks, which are then sort of like censored. All these things give extreme leverage to people that want to control their populations, basically. And this isn't sort of theoretical. I mean, all these things are playing out right now as we speak. All these systems are being built and deployed. So I think the realization is that, the internet and just the general digitization of society gives a great opportunity to authoritarian states. And, it's important that we, develop and foster the tools that give people alternatives and help them fight back a little bit.
What do you think about the U.S.? Do you think the U.S. is at risk in terms of the exposure you're talking about, in terms of the government with AI, with technology, surveilling their citizens? Do you think our liberties here in the U.S. are at risk, or are you mainly talking about countries that have, let's say, less democratic, governments and regimes?
Well, the U.S. is a federal system, so it really depends on the state. And honestly, the U.S. isn't as centrally strong as it was in, for instance, the 1940s, where the executive had extreme amounts of power, right? So, all things considered, it could be worse for sure. But, from a financial surveillance perspective, since the 70s, we've been giving up ground in terms of surveillance. There are a number of laws passed. Obviously, the Bank Secrecy Act is the most well known, that kind of require more and more surveillance. We're seeing this enormous scope creep with regards to financial surveillance obligation. We've seen the threshold for disclosing suspicious transactions or cash transactions decline in real terms over the last few years. Since 1976, we have this thing called the third party doctrine, which means that when you have information that is custodied with a bank, you don't really have any right to privacy. The kind of de facto treatment of that is that the government can obtain that information without subpoena. So we have been giving up grounds on the financial surveillance side of things for several decades now. If we do end up completely digitizing our sort of financial networks, then we're going to be giving up more ground, because currently there's nothing like physical cash which purports to exist in the digital realm that the state has said they are okay with. And so Bitcoin is sort of a private sector alternative to that. It's a free market alternative. That's why I would support Bitcoin. But as you say, the U.S. doesn't have sufficiently consolidated power such that it can impose super tyrannical measures on the population just yet. But I would say 2020 has been a banner year for various countries staking out new grounds and seizing new kinds of power and control.
Yeah, it is fascinating to me, the role of technology and the government. In a sense, like if you look back 100 years ago, like governments, they didn't even issue passports. You just like travel places, and the amount of control the government has accrued over the years, it seems like with technology, seems to be immense. And it seems like what is going to stop this, in a sense? Because you have technology rapidly improving. The power of processing, you have the internet connecting everything, you have now the advent of AI, and with all currencies going digital and cash becoming extinct, it's like cash, in a sense, is like one of the greatest, I think, preservers of privacy, in a sense, for people.
Yeah.
But you have all of this becoming transparent, but it's not transparent in a way where perhaps the individual liberties might be at priority, but perhaps it becomes transparent in which the government's agenda and role become priority. And in that sense, it's like, where does this all lead to? Like, what are your thoughts? Do you have concerns about the role of technology going forward? Like, how can this be stopped? I guess this also leads to Bitcoin as a potential, answer. But what are your thoughts?
Yeah, and it's funny that I could someone might listening to this conversation might characterize me as a Luddite or something, or sort of anti-technology, given that I am an investor in technology and founded a tech startup as well, an analytics startup no less. But I think technology itself is neutral, right? So technology itself is not politically opinionated. It's sort of what we do with it that then has political implications. And, so it depends. Like, there currently are technologies that give governments enormous advantages to scale and basically unprecedented ability to sort of interfere and intrude upon everyone's daily lives in a high leverage way without devoting too many resources. So that's absolutely true. But there's also technologies which are facilitating a sort of dispersive movement which restore power to the individual. So you have both directions, right? So, some examples of technologies I'd give that were sort of, more favoring the individual as opposed to the collective would be, without speaking positively or with prejudice, I would say cheap armaments that were, in long-lived and easy to manufacture. The AK-47 would be a good example. That facilitated a lot of insurgencies, especially after the Soviet Union broke up and the arms were distributed worldwide. That made it insurgency much cheaper and more viable, because suddenly, it was easy to engage in asymmetric warfare. especially as more of these firearms were available. So that's one thing that privileged, these smaller collectives over the states. And, those insurgencies were successful, right? Afghanistan, Vietnam, the U.S. kind of lost in both of those countries, I would say. Public cryptography is something I already mentioned. It basically means that you can have secrets in a digital context, and it's virtually impossible to break. 3D printing is another thing that privileges individuals as opposed to the state. I mean, the pace of development in 3D printed firearms is really astonishing. It was 2013 that Cody Wilson released the Liberator, which was this like really junky looking plastic gun. Today, 7 years later, you have, basically plastic equivalents of AK-47s that function fairly well and have just been developed in an open source way by these sort of collectives amorphously operating online. And so the very notion of what a gun is has completely changed now. Now a gun is basically a series of coordinates. It's a file with mathematical coordinates. And I'm not saying this is good or bad, it's just is, right? So what it means is that the legacy approach to, in this case, gun control regulation is now out of step with reality, where any hobbyist can manufacture a gun with a $200 3D printer and some parts that they can buy online, which aren't regulated. So, that's totally changed, that particular, side of things where we're talking about the logic of power and violence. And I would also argue that cryptocurrency is similar in that it restores much more power to the individual as opposed to the state. So, I guess the point is, for sure, technology in the last couple of decades has been facilitating creeping authoritarianism, but there's also technologies that help you push back, and so it goes both ways.
Okay, so I want to ask a few more questions on this. So, if you take, for example, let's say 3D printed guns, and you say, okay, this is democratizing, let's say, the ability to defend yourself, or at least to have some type of weapons, and whether that's good or not, it gives more power, let's say, to people.
Sure.
Versus, let's say, an organized army. At a certain point, though, like, let's say you could 3D print, a very effective a weapon of, like, I wouldn't say mass destruction, but a weapon that you can kill quite a few people with. Wouldn't that just lead to the eminent regulation by government? Meaning, doesn't the increased power of that technology gives to the individual through technology just lead to an increased motivation and justification for government to regulate in a higher way that would constrain that technology? Thus, it increases the role and the size and the scope of government's role in society and individual life?
Yeah, it's a fair question. And ultimately, at least here in the West, the key question is how much power do we, the people, want to allocate to the state, right? We have a say in this. And, so that's the ultimate question, is really how much power are we going to give them over society? But in the case of 3D printed guns, I guess the point I was making is, for sure, there could be a reaction from the state, which is super onerous, reinterprets all established, gun control legislation and defines a piece of plastic as a gun, or defines, some code as a gun, or some mathematical coordinates as a gun. So that's totally possible. Maybe it's even likely, who knows? But what it also does mean is that the ability to create a gun went from, you had to own a factory, 100 years ago, or you had to have some like fairly sophisticated machining parts, and you needed a fair amount of knowledge and expertise, to today, pretty much any hobbyist in their basement can create, effectively a functioning firearm with a really cheap 3D printer, and all they need is a file downloaded from the internet. So that's just a key fundamental, on the ground set of facts which has changed. And so fundamentally that technology is easier to distribute and harder to control.
Well, yeah. Well, I'm kind of like asking a kind of a couple steps further, where let's say this technology it continues to grow. Let's say with this is just an example of 3D printing guns. I mean, there's probably thousands of examples. I mean, you're saying like there's, the people have a say in how the government chooses to regulate, but does that really hold when you have, let's say, thousands or hundreds of thousands of people 3D printing, hypothetically, AK-47 type of, let's say machine guns, and doing, let's say, whatever they want to do with that? Wouldn't, in a sense, like that technology and the immense power it gives to the individual, in a way, force governments or create, in a sense, a massive government in itself to regulate it because of the massive amounts of power that technology is giving the individual? So in a sense, you're saying that people have the choice of how the government will regulate it, but does the government really have a choice? Like, is technology in a sense dictating how governments will regulate technology because it is so massive, it is so powerful, and therefore governments are justified to take massive, big action? So in a sense, does technology create a monster of a government?
Yeah, I think only the government can do that. To be frank and not to be glib, but if you look at, for instance, what was spoken about in similar terms with the crypto wars in the 90s, when the distribution of public key cryptography code was covered under arms control, arms export legislation, ITAR. And so this was spoken of in the same way. This is a military technology. Civilians are not allowed to have it. We have to stop its export at all costs. And what happened was a bunch of hobbyists basically won that battle. Eventually, the general public was also persuaded that this is really just cryptography. It's up to the particular individual how they're going to use the technology, and the government surrendered their control over that. So, it's not a foregone conclusion that the reaction to 3D printed would be the state, seizing, extreme amounts of power in reaction. In this country, there's controls on that for sure. I mean, for a start, it matters what the local states have to say. I think the states have some ability to sort of negotiate that power arrangement with the federal government. The Supreme Court stands in the way of super, widespread changes to jurisprudence and reinterpretation of sort of existing statutes. So there are controls in this country. Now, as for others, look at the EU. Gun control is a super established thing. So for sure, they probably would have much less difficulty, changing the laws to accommodate a new technology like 3D printing.
Mm-hmm. I think what I'm getting at is a bigger trend, and I guess this applies to crypto in a sense, but it seems like technology, it helps people in terms of convenience, in terms of becoming more efficient, obviously to obtain certain objectives and goals, whatever they might be. So technology is an amazing force. However, it seems like on the flip side, technology is an amazing enabler for those who would like to, let's say, ensure and secure stability and safety for the public. And they seem like, in a way, like there's two huge trends going on here, which is like you have technology enabling personal expression and convenience and efficiency, et cetera, throughout society, one of the biggest, let's say, revolutions in history. But then it seems like on the flip side, you have this other major revolution happening where technology is, in a way, encroaching on personal liberties. Like maybe let's take a more of a global context, take a step back out of the US and look at what's going around the world, and just look at China or some other countries. It's like technology is being used in amazing ways, to enhance the government's ability to maintain control and safety, while in a sense providing economic, let's say, stability and benefit for their citizens. And it seems like almost in a way, technology is enabling a type of, I wouldn't go so far as to say a dystopia, but it's not the picture that many technologists would have imagined, let's say in China or let's say some other countries in the world. Like, how do you reconcile that? Is that just something that is by choice? Do you think people just choose that? Or do you think there's something inherent about technology that is going to lead to bigger and bigger, stronger and more powerful governments in the future?
Well, yeah, I mean, I think you're spot on there. The onward march of technology, especially communications technology, it's very convenient to use effectively centralized databases, whether it's for money or for email. Nobody runs an email server anymore, or for social networking, social media, communications, chat apps. The centralized server model is the most efficient way. It's the most convenient way. And so as a consequence, people opt for that. And then the servers themselves become honeypots, and they, as in as much as the government can commandeer them, they then control what happens in that domain. So for sure, that's been the trend since, I would say, really since the genesis of the internet to today. And so the question is, can we create architectures for communication, for the internet, and for commerce that are more distributed, that push power out to the edges of the network effectively? And so that is the central conceit of the crypto industry, not just in a monetary context, but also in a sort of application and a platform context. This is the thing that people refer to as Web3, which is, your online identity is not necessarily custodied by a Google, Amazon, Facebook, WeChat, Tencent, whatever. Your online identity might be cryptographic information that you yourself custody, and then you use that to engage in sort of commerce and, just other forms of internet transactions with other people. And so, that is one challenge that I would say the crypto industry poses to the Web 2 architecture, which is highly, highly siloed and, consolidated. That change, I think, is going to occur because, you just have these concentrative and dispersive cycles, and it's clear to a lot of people that things are not functioning very well. Just this morning, Google went down, and that took out a lot of people's ability to work on their dissertation or work on an article because they were using Google Docs. It took out their ability to turn on the lights in their bedroom. It took out their ability to write emails. And that wasn't really how the people that built the internet intended the internet to look like. Not everything totally controlled by a handful of sort of either Silicon Valley or companies in China. So yeah, I do think something's going to change. I think it's also possible that it changes due to antitrust. The government saying, hey, these internet companies are just too big, they have too much power, and we're going to break them up. And so that's another potential resolution. But my preferred form of resolution is a market-driven one rather than a state-driven one.
Mm-hmm. Okay, so I'm curious, regarding this, regarding government getting empowered with technology, let's say. You seem to refer back to some themes that technology can actually have the other effect, which can, in a sense, counterbalance, let's say, the growing power of government, because you have, let's say, innovative uses of technology to distribute power and to be, let's say, a counterbalance to government. However, if you could look at it though, in a sense of saying that technology, you bring up PGP, for example, with encryption, and I could look at that and I could say, well, the government looks at PGP back in the day and they go, hey, this isn't a national threat per se. It's not like our country's going to fall apart and the government's going to lose half its power because we allow just PGP right now. It could be a future threat 20, 30, 50 years from now. And I would dichotomize those type of technologies in a sense where you have technologies that the government doesn't view as current national security threats, that will, cause their country really to fall apart. And then there are certain technologies that actually the government, and it's not just technologies, it could just be other things, but in organizations or whatever that the government deems as like the country could fall apart. Let's say, for example, terrorists since 2001. It's been this elevated threat where it's like, hey, this is a threat that's of national importance, security. So the approaches to these two types of categories are completely different, right? The non-national security threat is kind of like whatever. It's like we'll do what, just whatever. But the national security threats are treated in a way that's in a hypersensitive way, right? And these are very focused on, and it's very obvious what the government does. They do what is best for their survival because they view it as national threats. Whether or not they're national threats or not, that's a secondary, I think, issue. If the government views it as a national threat, then they do take the obvious, I think, approach of protecting their survival. Now, when we go to, for example, 3D printing of guns, we could say, okay, right now the government doesn't care about it as much because it's not the highest national security threat. So the government could kind of let it be as is, sort of, until it grows to some type of big issue. When we go into crypto, I could say the same thing. For example, crypto is, in a sense, just kind of a fringe movement. It's not the highest national security threat, let's say like terrorism or nuclear weapons. Therefore, I could say the government really isn't serious about regulating or caring too much about it. However, what happens in the case where crypto becomes, let's say, huge? It becomes like a dominant monetary system where the government feels like this is a national threat, where our financial health and security, our ability to print money, our ability to survive and thrive, let's say, as a country, and our power is being limited, which also limits our ability to survive, perhaps. That's their perception, at least. Isn't it inevitable in a sense that there's some type of battle and clash between government and crypto if that scenario plays out?
Yeah, I think so. Yes. And if you talk to folks working in the Bitcoin industry or core developers, they will often talk about their threat model as being the state. We have to build systems that are resistant to sovereigns. And that is the highest possible threat model. I mean, that's the highest, bar to clear. If the U.S. really wanted to obliterate Bitcoin, if they wanted to really marshal the resources necessary to do that, and they had the political, green light to do so, they probably could figure out a way to really dramatically interfere with the network, whether it's, putting out arrest warrants for all core developers, storming the offices of crypto exchanges. There's things they could do that could dramatically, reduce the liquidity profile of Bitcoin and make it much harder to get access to. Now, will they do that is another question entirely. So we have a rule of law in this country. We have political constraints to action. Generally speaking, the U.S. tries to inculcate, the tech industry as opposed to quashing it or suppressing it. Generally speaking, it doesn't just, try and arbitrarily confiscate the property of its citizens. But I mean, your broader question is certainly a good one, right? I think, probably in the medium term, the biggest threat to the dollar is likely to be another sovereign currency as opposed to a cryptocurrency, because that's, and if you ask central bankers this, if asked if they're worried about Bitcoin, they pretty much always say no. But they are worried about, digital dollarization, the tokenization of sovereign currencies. So that tends to be the main thing that central bankers are nervous about. If you ask European central bankers, they're worried about the dollar, their citizens engaging in currency substitution and denominating their savings in the dollar instead of the euro. This was the main objection to the Libras, that you had a bunch of regulators worldwide saying, we don't want our sovereign currency to be dollarized. It wasn't that they were nervous about being Bitcoinized per se. They were nervous about their citizens engaging in dollarization through this new technological medium. So I think it's still a story of the clash of sovereign currencies. And in fact, one possible outcome here is that the dollar really gets much more dispersed globally because you can kind of distribute it directly on a kind of a direct-to-consumer basis in a way that you couldn't before. So it can kind of fill those nooks and crannies, but in a way that's more efficient and more scalable than the way that you could do so with physical cash. But there's obviously a lot of physical dollars circulating outside the US, but it's even easier to engage in dollarization if you're doing it in a digital format. So I think the near-term thing is that, the stablecoin phenomenon is what provokes a backlash from monetary authorities. But and the other thing, I think, the other point I would make here is there are competitors to sovereign currencies, non-sovereign competitors. Gold is the main one, and central banks, some of them did try and suppress the usage of gold for a time. Of course, gold was made illegal in the U.S. in 1933, I think, private ownership of gold, Order 6102, back when they wanted to run really high inflationary policy and keep interest rates low, and they didn't want people to look for an alternative. So that has happened in the nation's history. But today, central banks use gold for its monetary properties and for its sort of value preservation properties. So they're sort of on board. So I think ultimately, in the long term, most central banks would find Bitcoin to be a pretty valuable tool, assuming it works in the long term, as opposed to trying to suppress it indefinitely.
Okay, so let's go into this. Why would a government feel like Bitcoin is like net beneficial to them long term? Like, I mean, when I go into the essence of what Bitcoin is, it really seems to be, as you said, like it's a economic and political or philosophical like theory or approach that's very deep, and it seems, in a sense, almost antithetical to a lot of what modern government stands for, and plus this, I call it kind of this big tech or this technology-enabled government that our government has evolved into and is evolving into. It just seems like the Bitcoin ideals are so opposed in so many ways, and I'm wondering, like how do you think like a government who finds their monetary policy restricted, their ability to print money on demand, and all that, like how is that going to be net beneficial in the eyes of a government?
Sure. Yeah. So I'll give you an example. Start there. So there's plenty of cases where it's like positive expected value for government to shrink their own power. And one obvious example would be when they've experienced a sort of monetary failure. So Ecuador in 2000, their local currency, I think it was called the sucre, was really devaluing quickly, and Ecuadorians spontaneously adopted the dollar as an alternative unit of account and medium of exchange. And that was a bottom-up phenomenon. So first the citizens did it, and then the government kind of capitulated and said, okay, we're a dollarized country, we're abandoning our sucre standard. And that totally impaired their monetary privilege by 100%, right? So they were no longer able to print to finance deficits. And immediately inflation went into check, which reduced their ability to, reduce the size of their sovereign debt, for instance. But what happened was there was lots of GDP growth. Subsequently, the population, individual savers were very happy because they had a great savings device, the dollar that they could use with banks. So it meant that the regime survived, right? The alternative would have been collapse. So in some cases, I think it's a totally viable proposition for the government to actually shrink its toolkit if it means that there's really good potential consequences from doing so, with instances of dollarization being a prime example. So I think it can be worth it at times. The other point I would make here is there actually are a number of sovereign countries that it seems are using Bitcoin today. Three that I would point you to. They're not really the ones that you would want a glowing review from, but they are the ones that practically are using Bitcoin. The reason they use Bitcoin is because it doesn't discriminate in terms of who uses it, and so it's not exposed to the same constraints that the US-based financial system, where deplatforming and sanctions are a common feature. So the ones I'd point you to would be North Korea. Not exactly, you don't necessarily want them on your network, but it appears that they they are using Bitcoin, but more saliently, Iran and Venezuela. The Iranian central bank released some guidance about Bitcoin recently, saying they would be settling trade flows in Bitcoin terms with Bitcoin that the central bank was acquiring from private Bitcoin miners in the country. And in Venezuela, you can renew your passport and pay for it in Bitcoin. I mean, the government operates a crypto remittance service. Bitcoin is a pretty established feature of the regime down there. So these are states that have been excluded from the financial system, for better or for worse. And they are adopting this independent settlement asset, again, for better or for worse. And I think that speaks to its strength. And it sort of answers one of your questions, which is why would a government use it? Because it's got interesting features that they themselves benefit from.
Sure. I mean, I would push back a little bit with North Korea and Iran, which I actually know a decent bit about. Yeah, their usage of Bitcoin is probably very, very limited and not really on like an official, government level. Yes. But I think this concept of a government, using or thinking of Bitcoin as something beneficial, it's difficult to grasp in my understanding, because when I look at Bitcoin, I go, this is, ultimately in its hypothetical, let's say best case scenario of establishing a separate monetary system or world reserve currency in some senses, it seems like that would impair certain countries, like let's say the US's ability to just print money, to control their own monetary policy. But not just that, without monetary policy in a sense, it's like there's benefits that I think going digital with currency that governments see that are existential in nature going forward, that haven't been so much in the past, meaning the value of digital money is something, a new phenomenon that these governments are starting to latch onto as an existential benefit that they can control. Like one example is you have the increased use of surveillance, right? With digital money, you can see where people are buying what goods and where they're buying it. So in a sense, if all of that stuff is transparent and the government has access to it, and I'm not saying this is good, this is I'm fundamentally opposed to a lot of what's happening, but I'm just saying the reality is you have a whole grid of trillions of data points of where people are at, what they're buying exactly. You put a layer of AI on top of that, and you could spot out the criminals just like that. You know exactly what they're doing, because if they're buying certain ingredients to something, at certain locations, you know where they're going and what they're going to do with those ingredients. And that level of, I guess, power that the government can use to, number one, provide security and safety to their population. It ensures their existential future. Without providing security and safety, the people are going to be like, what's your point, to the government? So on one level of security and safety, the government's going to view, in my opinion, the monetary policy, the control of money, and the full transparency of all transactions of all the players as existential in terms of their role to provide society. Then the second thing is on taxation. You have increased debt with governments around the world. This is going to lead to an increased pressure of wanting to raise taxes and wanting to increase a revenue to pay off debt, but also to exist. This is existential in many ways. And so in a sense, the government's ability to control the monetary policy, to be able to print money, is existential in some ways to pay their debts. And it's not just that, but they can accrue more taxation revenue by having complete transparency, because there's no, I guess, transactions that the government won't be able to see hypothetically in this kind of somewhat dystopian world of a government seeing everything. But in that case, you can micro tax micro transactions. You can do a 0.001% tax on a 10-cent transaction. You have trillions and trillions of transactions, going digital all over the place. as the government sees all of this, they see it as potential tax revenue, right? 0.001% tax on every single microtransaction, increasing our tax revenue, which is existential. So in that second sense, it seems like the government's ability to control their money, to see it all transparently, the government's going to view it as not just tax revenue, but as existential to accruing more revenue, right? Building, growing revenue in the future to sustain their governments. So I'm like, how is Bitcoin like going to be beneficial in the government's view going forward? It just seems like it's diametrically opposed in so many ways. Like, what are your thoughts?
Yeah.
What am I missing something here?
No, it's a good question. I think the first thing I would do would be to push back at one of the embedded premises in the question, which is that, it is strictly in the public's interest to have a wholesale surveillance regime instrumentalized through the mechanism of transactions. We've survived without that for 200 years of history in the U.S. here, pre Bank Secrecy Act, so for about 200 years from the founding of the country, and I think we could survive without it for some time. So I don't necessarily concede the point that we need this full level of financial surveillance in order for the public to be safe or secure. I still believe that crimes can be, punished, and crime can be abated through traditional means as opposed to just trying to do it through the vector of payments. So just wanted to briefly address that. But I mean, generally speaking, I certainly see your point. There's an enormous allure to digitizing currency and doing it on a system that you control for surveillance purposes, for control purposes, for tax collection purposes, for imposing negative interest rates. If you wanted to, get really precise with your monetary levers that you're pulling, if you had a central bank digital currency, you could easily impose negative interest rates. You can't do that with cash, for instance. You can't make cash have a negative interest rate. You can't make the physical dollar shrink, a little bit every year. So there's certainly an allure to that. I think the question I would pose to you would be, or the point I'd make is, we're not going to see homogeneity in terms of the way that these technologies are applied. It is going to be conditioned on the nature of each particular state and the social contract they have with their citizens. So if the social contract is, look, we're going to give you economic growth in return for authoritarianism, like a kind of a Singaporean social contract maybe, you surrender a huge amount of liberty and we'll give you stability and growth, then maybe people would be okay with a completely surveilled transactional regime. But if it's a kind of a looser or alternative social contract where you're not going to surrender all personal liberty for the sake of growth, then you'll get a different configuration. So in the U.S., I happen to believe that the social contract does tend to pride individual liberty and privacy, and that's why we don't have a retail CBDC that's been deployed or a retail CBDC that looks anywhere near deployment. And if we did get a central bank digital currency in this country, it probably would include some privacy assurances. So, I think that's just a key element of American constitutionalism, is that we have a reasonable right to privacy. We have a whole amendment about that, no unreasonable search and seizure. We have due process, so you tend to need a warrant if you're going to collect lots and lots of data. So while some of the goals that you mentioned are, valid goals, reducing criminality, reducing tax evasion, potentially being able to implement super granular monetary regimes. I think there's a fundamental tension there where we, at least in America, we wouldn't necessarily accept the proposed remedy because it's basically too onerous. Now, that doesn't necessarily hold for every state. There's an array of different models. But I think the thing to remember is that it does depend what political regime you're sort of contending with.
I mean, what do you say to people who might say, okay, if you compare the U.S. to, let's say, other, more autocratic regimes, fine, U.S. might have a certain level of privacy and personal liberties, but if you compare the U.S. to 30 or 40 years ago, perhaps our personal liberties have decreased, or our privacy has radically decreased. And for example, take, Edward Snowden and his, revelations with NSA, and just what the government, look at the Patriot Act, in the past 20 years, like look at all of these things that are going on, and the mass collection of data from companies. And sure, you have, some more regulation. EU is like taking some steps. California's taking some steps in terms of data collection, regulations, et cetera. But like, is our society really like, do we really have more privacy now than 20 years ago? Like, what's your take?
We don't. We absolutely do not. Yeah, I fully agree with you. Can we salvage this is the question. And my answer would be yes. Don't lose faith. We can absolutely, do our best to restore a measure of individual privacy, whether that is in a monetary context or just in a social graph context. That's precisely the main thing that the crypto industry is focused on doing, is using public key cryptography both for financial transactions and for relationships between individuals in a digital context, basically. And so we take a definite, we have a definite view on this, which is, yeah, absolutely, our rights have been eroded over the last 40 years or so, and in an accelerating way. Even in the last 12 months, things have changed really dramatically. But we wouldn't give up. I don't see why. I think the American values are great fundamentally, and it's about bringing them into concert with reality. And my preferred approach is through technological measures, basically.
What would you say that American values? What would you say to the argument that, let's say, American values have already eroded? What you're talking about in terms of valuing privacy and personal liberties and stuff, like this might have been like a long time ago, but in today's world, today's modern world, today's social media world, look at the past 20, 30 years, haven't people already traded a lot of privacy, a lot of liberties, for safety, for convenience, for security, and haven't the values of what America stood for in the past in terms of individual freedom and liberties, hasn't that deteriorated a lot? And what is the hope going forward that something radical will change, to preserve privacy going forward?
Well, the values haven't changed. I mean, the values are the same. If we're talking about sort of the Enlightenment values that this country is premised on, those are invariant. It's our implementation of those values in, the modes of governance, and it's whether we cherish the values or not, which is changing. So maybe our commitment to the values is changing. That doesn't reduce the merit of the value itself. I mean, so great example would be freedom of speech. I mean, that's not just a political value that's encoded in our Constitution. That's just a general principle, which was present at kind of the framing of this country. And you could say, well, thanks to censorship on big tech platforms, our commitment to that value has declined, or its implementation in the real world has decreased, and we've realized there's trade-offs and so on. But I think there's a whole contingent of people that have now experienced being deplatformed by this kind of arbitrary mode of censorship, that are realizing, oh, hey, this is actually maybe an important thing to preserve. And now they're looking for alternatives, whether it's new systems of social media or more decentralized alternatives. So I think we do need a reminder that the values have merit, and I think a lot of us are getting that reminder in the last few years.
Mm-hmm. Got it. I'm curious, long term, what do you think is the best, the biggest, or the most ideal best case scenario, in your opinion, for Bitcoin going forward, kind of more long term? Like when you look at kind of what you are working toward, and I remember that one writing, that article you did on your site about the analogy of building a cathedral and one brick at a time, and whether it succeeds or not, like the important thing is you believe in the mission, right? What you're doing. Like when you ponder kind of the why, the motivation, and of all the effort you're putting into Bitcoin, like what is that most ideal best case scenario? And not just on a practical level of, let's say, Bitcoin at a certain monetary amount or role, but also in terms of more of a profound kind of generational level, like what
Sure.
remains, like what how do you picture all that?
Yeah. So, simplest possible answer would be the right to use a cash-like product online is restored or created, and we have the right to privacy in transacting with with a digital cash, and we have autonomy, so we can choose whom we transact with, and we cannot be restricted from transacting with anyone. So take the assurances and the rights that come with physical cash and transpose them into digital medium. That is the primary objective, I think, is just digitizing the qualities of cash. Now, with Bitcoin specifically, I would like it to be a highly liquid, globally available commodity where you can get frictionless access to it and denominate your savings in it if you choose, or use it as a settlement network if you choose. Now, we've made a lot of progress towards that. I mean, it is very liquid in lots of countries worldwide, and we're actively investing in brokerages in those countries where it isn't liquid yet. So we're trying to remediate that in the countries where it hasn't fully penetrated yet. But we've made amazing progress there, progress that I would have never expected when I started paying attention to this thing, about 7 years ago. So from that perspective, we've made great progress. I think the volatility ideally would be tempered because that impairs its qualities as a store of value asset. But if Bitcoin reached the kind of maturity of something like gold, and the sort of risk profile of something like gold, that would be success for me. But then maybe lastly and most generally, I would say if it became normalized that non-state, savings devices were a valid way to denominate your savings, they're a valid instrument, and people were able to sufficiently kind of advocate for the usage of those instruments such that they were generally available. That would also be a pillar of that success. Just normalizing the notion that we don't necessarily need or want monetary discretion. It's totally okay to want non-discretionary monetary policy. That's a valid thing. That was kind of the idea with the gold standard, is that monetary authorities could not influence the supply of money in the economy. They'd use other levers, right? So if we were able to restore, the appreciation for that concept, that would be kind of a victory in my eyes.
Okay, so what's the significance though? Like, in a sense, like, so what? So let's say all that happens. So how does that change people's lives?
Well, let's say all those three things happened. It would most likely demonetize a bunch of weaker sovereign currencies, because then we would be entering a truly free and unencumbered market for currencies, for savings, for transactional media. And fundamentally, the product that a lot of central banks are offering is a poor one. They can offer that product because they have a local monopoly on currency, right? So if you're forced to transact with a monopolist, they're not going to give you the highest quality product, right? If there's only one grocery store I can shop at, and they only serve one variety of apple, that's the apple that I'm going to have to eat. So a lot of people worldwide are getting this horrible product. They're getting inflationary currencies. They're getting bank seizures. They're getting, arbitrary debasement. They're getting sovereign defaults. That's not a great product. If they could choose an alternative, I'm sure they would. And so this would safeguard the savings of those people that are sort of currently or consistently at war with their governments as it pertains to their savings. The other thing I think it would do, which is maybe more addressable to the West, is it would probably force central banks to be more prudent in the way that they operated. It would serve as a check on their power. And I don't think Bitcoin is going to destroy the Fed or anything, or the ECB, or the Bank of England, or the Bank of Japan. But what it might do is is be a realistic check on their power. If at all times there's a threat of desertion of the local currency and moving to an alternative, their incentive is to be a little bit more prudent in the way that they operate, maybe a little bit more restrained, probably a little bit less inflationary, and less willing to stimulate at a moment's notice for any old crisis. So I think that's the realistic effect. And you may not notice that, that might not have an immediate effect on your life, but I think it really would make a difference for a lot of people. I think, the asset bubbles that we see in the world right now, the reason property is expensive, the reason people feel marginalized and unable to, get a foothold, even get a foothold in a middle class existence in this country, is because they can't afford an apartment in downtown. It doesn't make sense for them to try and even climb the professional managerial ladder. A lot of these things, it doesn't make sense for them to really buy equities in their 401k at a average PE ratio of 25 or 30. A lot of the misery that we see in society, I would say, is due to the asset bubbles, which we know are a direct consequence of monetary policy, a fairly inflationary monetary policy generally. So I think there's certainly effects on real people. It's just they're a little bit harder to perceive. And all I'm pitching is let's just let people make up their own minds. Let's inculcate more of a free market for monetary goods.
Okay. Interesting. So let's let me ask this. If Bitcoin failed, let's say if Bitcoin spectacularly failed,
okay.
And I know a lot of Bitcoiners don't want to even think about that, right?
No, sure, go ahead.
But I'm like, hey, I'm like a guy who wants to think about different possibilities here. But I'm just hypothetically, if Bitcoin spectacularly fails, why would that make you sad? Like what's the crux of it? Like what would cause you, distress? Curious.
Well, the obvious answer is, it would be a monetary penalty on myself and all of my friends. But the other reason is because the circumstances of Bitcoin's birth were really particular and extremely favorable. Satoshi was this anonymous founder who created the protocol and left and instituted this proof of work based issuance model, which means simply that there was effectively fairness in who was able to get the coins. You had to contribute computing work in order to be entitled to receive the coins, which meant that it was a really interesting it was a way to bootstrap a monetary system in a relatively fair way. Everyone had to kind of pay their due to get a piece of it. And that would be impossible to replicate today, fundamentally, because if someone came along today and said, I'm creating Bitcoin 2.0, what would happen is, and I'm going to release it in such and such manner, and everyone knew that it was going to be as significant as Bitcoin, venture capital firms and hedge funds would immediately try and acquire all of the coins, at a discount to market rate. They would scoop in and do their best to get all the coins, and it wouldn't be really that well distributed, right? And that's kind of what we've seen with all these alternatives to Bitcoin, where you're having token sales. They get bought by big venture firms and hedge funds that are, specifically set up to do that. So it would be really hard to have this more organic initial distribution. Bitcoin didn't have a market price for 2 years after launch. So it had plenty of time just to circulate between hobbyists, get distributed, without the big financial incentives coming into play. So that was a really unique period. And, I think that's a really desirable quality for a monetary system to have, is this notion of fairness. Not perfect fairness, of course. You can never enshrine perfect fairness, but there was a real equality of opportunity around Bitcoin. And, even today, to create a unit of Bitcoin as a miner, you have to burn electricity and capital, which is kind of equivalent to that unit. So you're not really getting at much of a discount. That's a great quality to have. You compare that to the way, base money is created. That's just created with a keystroke. It's effectively free. So the fairness and the, idiosyncratic, unique qualities of Bitcoin's launch, that is the main thing I would be sad about, because it'd be really, really hard to replicate that today.
Mm-hmm. Okay. You mentioned about, the asset bubble that you're saying. Like, what's your take? Do you think it's largely caused by an expansion of monetary policy, of government printing money, or are there other causes? Like, what are the main causes of, let's say, what you're calling an asset bubble?
Yeah, I mean, if I could really truly diagnose the situation, I might be deserving of a Nobel Prize. But I mean, it's not really a secret that central bank policy influences the prices of financial assets. You know, Ben Bernanke even said one of the objectives of the first round of QE was to influence the stock market, to make the prices of stocks go up. And in this country, consumption is actually, really closely tied to stock values. A ton of compensation in this country is done in share-based compensation, dating back to regulations that were passed in the Clinton administration to encourage people to pay their employees with stock. So it's a weird situation we found ourselves in, where the stock market is kind of a bit of a political utility, and GDP growth is actually really linked, and it kind of follows growth in the stock market, because the stock market going up is what allows a lot of middle and upper class households to spend. And that's not a great situation to be in. We should never have a situation where there's a mandate that equity prices and asset prices always increase. But that's certainly a situation we're in. So it's not necessarily an explicit objective of each round of QE to cause stocks to increase, but it's certainly a consequence, an acknowledged consequence, and it's not something they do their best to prevent. The other thing is that as interest rates go to zero, fixed income looks increasingly bad. Why own a negative yielding bond? So you have this enormous rotation of capital where people are desperately searching for anything that might have a yield, and so it sort of plows into riskier and riskier assets. Stocks, equities are generally considered pretty risky. And that's why that's one of the reasons we've seen this huge rotation into stocks. It's not a great situation to be in, because the stock market was the primary savings device for Americans for, generations, along with property. And if they are structurally expensive, it kind of prices out people that are starting their careers and would normally be investing in a 401k. And now they're buying a much smaller piece of those earnings. If the price earnings ratio is 30 and historically it's 15 as a historical average, they're getting a much worse deal when they put their paycheck into equities. So, that's not like the whole issue here, but that's one consequence of the new approach to monetary policy we see.
Mm-hmm. Sure. Yeah, I think definitely it's quite complicated. I mean, if you look at the role of tech in companies, for example, you have a large part of the appreciation in equities being concentrated with companies who are taking advantage of tech. So if you are living close to a city that has lots of tech and you get a job in a company like that, you get equity, high salary. It's a flywheel, of wealth generation. But if you are stuck somewhere far away from that scene, and you are like, I don't know what the ability, there's a fundamental disadvantage that it seems like different segments of our society have in terms of their distance to technology and what's being, the value that's being generated by tech companies. And so, I mean, I think I do agree, though. I think this whole printing of money does have an effect, with assets. And it is a concern, and as well as many other, I think the growing inequality and wealth gap in our society poses some very profound questions going forward.
Sure.
And how our society deals with that. That's going to be, a huge, it's going to be a huge issue going forward in the next, 10, 15 years, I think.
It has been. And inequality is at really extreme levels, honestly. I mean, we're reaching the Gilded Age levels of inequality right now. And what happened after the Gilded Age? Well, we went into the Progressive Era. And, there's all reshuffling of wealth in this society. And I think a lot of us feel that that's sort of on the cusp here. And, the way that monetary policy worsens inequality is, there's an acknowledged relation between sort of the supply of money and the prices of financial assets. Newly issued money, as we all know, doesn't really make it into the real economy unless you're doing a helicopter drop or, universal basic income, which would be a more egalitarian way to issue new units of currency. But for the most part, new issuance kind of stays trapped in the financial sector and influences asset prices. And who benefits from high asset prices? It's people that own property, people that own stocks, and those tend to be people that are already better off. So I think people are starting to wake up to the fact that central banking makes inequality worse, or at least the way it's been practiced in recent years. And we're seeing more of a demand for the new issuance of dollars to go direct to households in kind of the same way we saw with the stimulus, maybe on a permanent basis, maybe on a UBI kind of model. And that would be really different in terms of the effect on inequality of issuance. But so far, it's all been buoying asset prices, which is great for venture capital firms. It's great for people that own property in big metropolitan cities, as you say. It's not really great for society, though.
Yeah.
And so we're going to reach a breaking point here soon.
Yeah, I think there's a lot of it's a fascinating thing that's going on in some ways, because you do see this inflation of a lot of assets, or let's say real estate or equities, connected with various factors, let's say printing of money, but also how equities or certain companies are taking advantage of the larger tech trends in the world. But then on the flip side, you're not seeing the inflation on the lower end as much. And I think part of it is, I think people are still trying to grasp what this whole technology and internet, and also this AI revolution that we're entering in as well, what it means. And I think in some ways it has, and globalization as well, it has lowered the prices of many of our consumer goods radically, because you have this globalized market, you have technology driving down costs. And so a lot of our basic consumer goods we're getting from, all over the world. And these companies are using, they're taking the raw materials and using technology to bring down the margin, where it's getting cheaper and cheaper. And so in some ways it's hard to track inflation on a consumer goods level, because technology is driving down those costs radically, with the huge deflationary pressure. And so it's a very complicated situation where if you just look at consumer goods wise, okay, fine, maybe prices aren't increasing that much. Maybe I do have more access, but then why do people everywhere, it seems why do all these other people have tremendous wealth where I don't have access to that wealth? You know what I'm saying? It's I might be able to get by going to certain discount stores and shopping on Amazon and getting what I need, fine, but it's I'm stuck, it's just I'm being squeezed, while you have all these stories and people making millions and millions, right? With real estate, with equities, etc. So it's becoming this, it's a strange world we live in, but the consequences of that tension, between the inequalities, is we're seeing this more and more in our elections, but we're seeing this growing discontent from one side. But it also seems like whenever I listen to most people on this side of wealth, who have, let's say, wealth, who have benefited from larger trends at hand, I don't see a connection. I don't see a deep empathy and understanding of the other side, of what it means to be disconnected and completely out of a wealth generation system, and just to be kind of surviving day to day. And that concerns me a lot, where it seems like we have these two worlds in our society that are divided. And I don't know how this gets reconciled going forward. What are your thoughts?
Well, I mean, as a Bitcoiner, I'm very attuned to trying to measure inflationary trends, even if they're not reflected in CPI, as you say. So I'm extremely sympathetic with the fact that there's this enormous bifurcation occurring between, the professional managerial asset owner class and basically everyone else. And, there's a lot of causes you can point to. You could say the offshoring of American jobs from the 70s onwards. A lot of Bitcoiners would actually point to the kind of petrodollar and fiat system, with the key breakage occurring in 1971, when we finally left the gold standard, which meant that the dollar was the world's reserve currency, and it became structurally expensive as a currency, which meant that we were not competitive as far as exports were concerned. And so it was cheaper for us to become consumers and to export the production to the rest of the world. And, I think that is one of the key reasons why we have lost the edge in manufacturing. All these blue collar jobs just went overseas. And, that's an enormous structural trend, which a lot of us point to as a direct consequence of monetary policy. But whatever the cause is, you're absolutely right. I mean, it's funny as well to see the distinction between these structurally deflationary trends like globalization and technology, which make TVs cheaper, so it's cheaper to buy a high quality TV than it was 10 years ago, but you still don't feel any richer. You feel poorer, actually. You feel worse off, all things considered. That's because education is getting more expensive, healthcare and, rent effectively. And, so it's not really a great consolation that, consumer devices are getting cheaper when the biggest expenditures you have are getting more expensive. So it is difficult to devise a metric of inflation which actually takes all these things into account, though. That's for sure.
Yeah, it's interesting to imagine what if if you took out the deflationary pressure of technology. Let's remove technology altogether from the past 30 years. Without that pressure, what would inflation look like today? And I think it would be probably a radically different situation. And I think in some ways
I would put the hurdle rate at roughly the growth of the broad money supply, which is about 25% annualized right now.
Sure. And then so I want to actually dive into first I want to thank you for taking this time to just go over a lot of these, I think, interesting, important issues in depth. I want to go into some of the more practical and specific things regarding Bitcoin itself. And the first thing I want to ask you about is the proof of work system, and more specifically, the amount of energy it takes. Now, I've read some articles from you saying that a lot of the energy used in Bitcoin is from China, from hydroelectric, and therefore it could have been wasted, or just this stuff isn't necessarily. It's possible that it's not necessarily wasted energy, or it's energy that would have been wasted otherwise.
Sure.
But I've also heard you say, in a talk, I think about a year or two ago, saying that to secure the Bitcoin network, right, the total cost of compute power and energy is a few $1 billion. So I think you were a year ago or so, you were saying about $2.3 billion a year. I'm curious, what's the current kind of update on that amount? And I guess as a segue, that's a lot of money, I mean, that's a lot of energy and compound to use to secure a network that is, in a sense, the main feature of the network, it appears, at least in my perspective, is its decentralized nature. Meaning, if it didn't have that decentralized nature, you wouldn't have to have proof of work, right, to secure it. And so it seems like it's a very costly feature, its decentralization, right? That's justifying, or that's accruing this expense to secure the network. Is that sustainable going forward, you think?
Yeah, so I just did the math, actually. The current annualized miner revenue, or you could also say security spend of the network, is about $6 billion. As of today, using 18,000 as the unit price, and there's 144 blocks per day, and there's about 6.25 Bitcoins in a block. So there's a little bit more because there's fees, but I'm not taking those into account. So it's in the single digit billions of dollars. Is it costly? I mean, it's kind of weird to think about, because it's not like Bitcoiners need to, donate to a GoFundMe to keep Bitcoin running. And if we don't meet a donation threshold, then it stops running. It's not like that at all. I mean, we're paying for it with dilution, right? So we pay for the Bitcoin network by having a dilution rate of 1.8% annualized, which is pretty low, all things considered. It doesn't, I wouldn't even say it erodes the purchasing power of Bitcoins, because it's completely forecastable. We've known from the start what the issuance rate would be. But so that's how the security is paid for. And so there's no notion, in my view, of security being insufficient in any way, because it just sort of is what it is. The security spend is a function of a couple of very simple things: the rate of issuance, the unit price of Bitcoin, and the fee pressure that exists on Bitcoin at a specific time. The historical security spend, you can totally even remove fees from the equation. The fees add a bit more complexity. So, like the other way to think about it is, to create a Bitcoin, a miner has to burn a certain amount in capital costs and electricity costs to be entitled to get the Bitcoin. So it's the miners that are stumping up that value, but they're being amply rewarded for that, and they're earning a margin. So it's kind of an industry like any other. Now, is it costly? Is it cheap? I don't know. Like, the cost would be the externality, maybe the carbon footprint, the carbon externality. That would be the real cost I would identify. And so, I think it's a totally valid question to say, is it worth it for Bitcoin to be producing X many tons of CO2 a year as an externality of it existing? I think it's a price worth paying. I think it's an important system that should exist. You might also say the same about gold. People will burn a ton of energy extracting gold from the earth. You have to sift, a ton of earth to get a couple grams of gold. So similar, it's just the Bitcoin virtualizes this whole process. You're not sifting through earth anymore. You're sifting through a mathematical space. So similar concept, and people made very similar points about the gold standard being expensive. I don't really think of it in that same way. The cost is just simply what the price happens to be, coupled with the issuance rate, effectively.
Mm-hmm. Like, going forward, though, as the amount of Bitcoin is ultimately limited and the issuance decreases over time, the motivation for miners to mine, to do proof of work in order to provide security for the network, on the new coin side will go down, that motivation. Thus, you might need other forms of motivation. Will that be in the form of added transaction fees?
Yeah, that's absolutely correct. So as you correctly say, every 4 years, the issuance rate from the new coin subsidy is cut in half. So that just happened earlier this year. We went from 12.5 to 6.25 per block. So we went from 1,800 new coins a day to 900 new coins a day. In 3.5 years, we'll go to 450 coins a day. And then eventually it'll just trail off to nothing. So then the question is, how is the network security supported? How are we paying miners? Well, with transaction fees. Every Bitcoin transaction has a fee attached, a couple bucks typically to make a normal size transaction. So that's another reason people will point out, hey, this thing's not really a payments network, not like Venmo. It's not like Visa even. It's more like sending a wire is really the thing that I would analogize Bitcoin to. And I'm happy to pay $10 for a bank wire because I know it'll settle immediately. It's a very credible way to move value around. And have very high assurances with that payment. It works cross-border. It's great. With Bitcoin, it's kind of the same thing. You might be happy to pay a bit of a premium to transact with Bitcoin because it's kind of going to settle right away. Mm-hmm. So I would analogize it to a kind of a bank wire system. And so I think the fees will be sufficient, but it is also something we don't have a lot of data on because historically miners derive most of their revenue from the issuance, not the fees.
Mm-hmm. Does it matter in the future if like Bitcoin, let's say, tanks, it's at like a few $100s and it's like all the coins have been mined? Like, does that hurt its prospects at all? Like, does the valuation help Bitcoin's ability to secure its network or not?
Yeah, it's a great question, and this is something that I would say is not settled science necessarily. So even how to think about what is considered an appropriate security spend, like, is there a threshold in dollar terms where we consider Bitcoin secure for miner expenditure, for miner revenue per year? Or is it more something you want to index to the market cap of Bitcoin? Do you want to say, well, we just need to cover 2% of the value of the system in miner revenue per year? Or do we want to index it to the transactional flow? There's a few economists who have written papers saying the value of the miner compensation should be a function of the value of all the transactions on the system. So that's 3 different models I just outlined. And you'll find people that will defend each of those models. So weirdly enough, you've stumbled on kind of, this is like the state of the art debate, I would say. It's not necessarily settled whether it's, the Bitcoin security should be thought of in sort of fixed fiat terms, in terms that are indexed to the market cap of Bitcoin or indexed to the transactional volume of the system. I probably lean towards the latter too. Unknown. Although, all of that said, we've never really seen any double spend incidents on Bitcoin in the modern era. So whatever threshold we're at right now seems sufficient. But if Bitcoin grows by another full order of magnitude, my intuition would be you'd want the security expenditure to grow as well alongside it.
I mean, like, is there a threat to Bitcoin where, let's say there's a new technology, or another, I don't want to say coin, but let's say another method to transfer decentralized money where it doesn't require proof of work? Let's say you have some amazing technological breakthrough. Is that a threat to Bitcoin at all?
I mean, so the Bitcoin and Ethereum situation is roughly analogous to this, right? So, several $1 billion worth of Bitcoin is tokenized and circulates on Ethereum, which is a different blockchain, right? So each of those transactions, they're not benefiting Bitcoin miners because, when those transactions happen for Bitcoin on Ethereum, those benefit Ethereum miners, right? So it's sort of maybe slightly parasitic in a way, in that these are settlements of units of Bitcoin which are happening on an alternative network. And also the same way, if we both use Coinbase, a Bitcoin exchange, and I send you a transaction, that settles on the internal books of the exchange as opposed to settling on chain, so to speak. So there are already ways to transact with Bitcoin not on the Bitcoin network. And so if there was a dominant way which took all the volume off of Bitcoin onto some third-party network, you might imagine that the fees on the Bitcoin network would become very low and then miners wouldn't be compensated. So very valid critique, I would say. The question is, would you want to fully remove all your transactions from the Bitcoin network to a third-party network? I'm not sure I would ever really trust a Bitcoin settlement if it wasn't settling on Bitcoin itself, right? Even in the case of Ethereum, if I have a wrapped version of Bitcoin on Ethereum, I probably only really trust that if I am settling it on Bitcoin itself. So my guess is there would always be a linkage from these third-party systems to the Bitcoin network where, the final settlement happens on the Bitcoin network itself. Mm-hmm. But certainly a super valid critique in my eyes.
I mean, there seems to be like quite a few assumptions, that I guess the hope is it would settle on the Bitcoin network. But let's say hypothetically, let's take a scenario where every 5 years or 10 years, technology radically changes, where what's available is completely different tool set, and let's say the next generation of technology is like an order of magnitude more efficient somehow. And let's say Bitcoin manages to survive in that first transition. But what's making Bitcoin survive that second and third and fourth radical order of magnitude technological disruption transition that might happen over time? And if you look at historically, like the incumbents don't really do a great job at adopting the most cutting edge technologies. You can have some critics saying that Bitcoin is more mainstream. They're not necessarily the most cutting edge in technology. It's kind of like the innovator's dilemma, trying to preserve what you have rather than disrupting your own network. Like the
Sure.
core Bitcoiners aren't going to destroy the value of their own Bitcoins, in order to adopt a new technology. But a lot of times in order to adopt a new technology, that's kind of what you need to do. So in that sense, how does Bitcoin solve this like innovator's dilemma problem going forward? Let's say 10, 20, 30, 40 years down the road.
Yeah, and as you say, Bitcoin's not known for being a highly iterative protocol. In fact, it moves very slowly, and Bitcoiners are actually trying to engage in ossification, whereby we would actually effectively at some point have a code freeze and not change the network anymore, right? So Bitcoin does not look towards being this highly adaptive technology that is changing based on new technological trends. In fact, Bitcoiners generally try to do the opposite. Um, I think as far as like trying to anticipate future trends, in networking technology, it's obviously impossible to know what payment systems are going to look like in the future. Um, if I knew, then I would invent them, right? But I think the way I see Bitcoin is, if you disentangle the Bitcoin, the protocol for moving money around, and Bitcoin, the registry of who owns what, those are two really different things. And my guess is that the registry has a really bright future, and people will be able to use that, list of who owns what, the account balances, right, in a virtualized sense. I think that will be incorporated into a variety of systems. And the important thing will be to preserve the monetary qualities of the network, not debase the network, not introduce additional inflation, anything like that. Now, the Bitcoin settlement network itself, I am not sure if it will exist in 20 years' time, for instance. It might look archaic at that point. So that would necessarily entail a change in the Bitcoin security model as well, if the settlement network fell into disuse. But I think regardless, and maybe it'll be a successor to Bitcoin built by Bitcoiners themselves. I think regardless, we will incorporate the sort of asset registry, the list of who owns what, the UTXOs. We will incorporate that into a successor or an alternative. So I don't know if that makes sense, but
Yeah, I mean, like, I want to talk about this because that it's assuming a lot of things that, let's say that the people who have the most vested interest, let's say in the Bitcoin network, get to preserve, that monetary interest in a future network. But most of the time with innovation, it happens in a different way where the people who are innovating and disrupting, they have a big financial motivation to disrupt the incumbents, right? They want to destroy the value, in a sense, of all of that registry. That's part
sure.
of the game.
Yeah, but
And
I think that maybe the difference is if you're proposing a new monetary system from scratch, you need to somehow get credibility from somewhere, right? Even
exactly,
Bitcoin had a huge problem with this. I mean, still today, people think it's not a credible monetary system. Why would I want to participate? So my guess is, if you have found a new, better way to build a digital currency, you probably want to piggyback on and align incentives with the established set of digital currency users. Now, Bitcoin's not the only one. Ethereum is also pretty, well developed and so on, pretty dispersed. There's a lot of people that hold Ethereum too. So my guess is, and I have no knowledge of a future system, would be that they would probably try and inherit the sort of established network effect of these existing protocols. And in fact, with a lot of new crypto token launches, we see this. We see them either airdropping their coin to the established existing networks, or building ways to, integrate these networks, or, trying to themselves become settlement networks for the tokens on the established networks. So we see a lot of this crossbreeding. Certainly, there's also antagonism where there's just a desire to destroy the established incumbents. But we're talking about monetary systems, and so getting that initial buy-in is like the really challenging thing.
sure. I mean, personally, I would categorize a lot of these other coins, let's say piggybacking on Bitcoin network, et cetera, as more like opportunists. They're not true disruptors in a sense. I don't think a true disruptor comes along that often. It's really, really rare. And
Totally agreed. I mean, totally agreed with
yeah,
you.
and
I didn't mean to,
sure,
lionize any of the altcoins. Yeah.
yeah. But I think like it, in my opinion, and this is I'm making my own assumptions based upon my understanding of technology and how it evolves. But in my opinion, every 5 or 10 years, the technology changes so radically that it opens up opportunities for new entrants to come up with completely different business models, completely different approaches, utilizing technologies that the old incumbents don't want to touch. And in that kind of world of like, it reminds me a little bit of like Craigslist and eBay. And I'm going to get flack from people, comparing Bitcoin to eBay and Craigslist, which I'm not doing in a direct sense. But I'm talking about the network effects. Like a lot of times, it feels like Bitcoiners revert back to this argument, oh, but Bitcoin has network effects. They have adoption, right? And it's so hard to get adoption. And it reminds me a little bit about how people thought Craigslist would never be disrupted, or eBay will never ever be disrupted in the future, just because of the immense amount of network effects that companies like that have. And I'm not going to discount the power of network effects. But oftentimes, if you look historically, those network effects only have its kind of heyday and its legitimacy during an era where that technology continues to be somewhat relevant. It might be a 5, 10, 15-year period. But after a certain period of time, those network effects get, in a sense, they degenerate or deteriorate because the power of the new technology in the hands of these hungry and ambitious disruptors just overtake, and they're able to create new network effects based upon new technologies. I mean, how do you view that? I mean, do you think I'm being a little bit too critical of, Bitcoin's kind of main, network effects advantage, or do you see this as a possible threat?
So definitely a threat. I would say network effects, as you identify, can degenerate quickly because it's all about positive feedback loops, right? The value of the system has to do with the size of the network. So as the network grows, the value grows, so everybody wants to participate. But then on the way down, if the network shrinks, then the value shrinks. And so it's a super linear phenomenon in both directions, right? And, I think that's absolutely correct. So we see network effects degenerate very quickly in all kinds of different phenomena, especially on the internet, especially with social networking. So contrary to what a lot of people say, network effects are not, they don't guarantee that you're going to endure forever. I wouldn't say Bitcoin's sole kind of source of legitimacy and credibility and longevity is its network. The network is certainly very powerful, and in particular when financial institutions adopt it, right? Because it's difficult to get them on board with a new monetary asset once they start providing custody and clearing and brokerage and really deeply intertwining themselves with the network. It's difficult to get that out. I think in finance, people or entities, especially with regards to payments networks, are very risk averse. They don't want to change the systems very often. This is why we still use COBOL in a lot of transactional networks, which is kind of an archaic computer language that nobody knows how to program with anymore. So in finance, I would say things tend to be much slower moving because the stakes are so high. We're talking about throughput in the trillions, so you don't want to screw anything up. So you're very slow to adopt things, and you're also slow to, abandon various technologies. So the pace of adoption of Bitcoin, I think has been faster than I might have expected for a new kind of settlement network. Now we're seeing, my own alma mater, Fidelity, where I worked, they have been full-throated enthusiasts for Bitcoin for about half a decade now. They started looking at it seriously in 2014. From 2014, it took them another 5 years until they actually built a product line around Bitcoin, Fidelity Digital Assets, right? So very slow on-ramp. And my guess is that a lot of these institutions that eventually adopt Bitcoin would also be slow to, divest from its usage. The other thing I would say is that, Bitcoin's quality as a monetary network is not solely due to just simply the network of entities that are using it. I would say it's also to do with the monetary credibility. So has it been able to follow its established monetary trajectory for 12 years without issue, right? Has the protocol stayed sound? Has the code largely stayed bug-free? Has it been running at a good level of uptime? Those things are, what I would say the primary sort of KPIs of a monetary network. Has it been able to stay free of, interference? Has it been able to stop anybody changing anything about the protocol to reward themselves, right? Those are some really desirable qualities of monetary network, and they just come with time, right? You listen to the BlackRock CEO, Larry Fink, saying, why is he taking Bitcoin seriously now? Because it's older and because it's been through more. So it's really that accumulated kind of Lindy effect, just the accumulated weight of time, which gives it credibility. So any competitor, I think, would have to do the same thing as well. Mm-hmm. So that's another reason why I think it's difficult to create a challenger network here, because Bitcoin now has about 12 years of existence and 12 years of really functional existence. And so that is really a difficult thing to kind of contend with.
Sure. I mean, 12 years is relatively short, though, in the bigger scope of things, and
in the grand scheme, yes.
Considering the ambitious, the size of Bitcoin's goals, right? I would say we're probably still in the very early innings of what Bitcoin could be. It's interesting. We're talking about like kind of what is kind of Bitcoin's competitive advantage in a sense. What is its long-term kind of enduring qualities, or what brings it, why will it stick around hypothetically in the future? And we talk about, let's say, network effects, and you bring up the whole point of adoption, not just of Bitcoin, but in the financial ecosystem. That is, it takes a while, for the stuff to get adopted, and that's an advantage because it'll take a while for people to deramp it as well, or to move from two different technologies. And you're talking about this issue of brand and trust as well. However, I think like in some ways, I mean, those are fantastic points. I think they do add, in a sense, value to Bitcoin. I'm not going to discredit any of that. I think they are crucial points. But it seems like when you look at what the essence of Bitcoin is in terms of the value it provides, and why it's been able to get the network effects, why it's been able to get the brand, why it's been able to get the ecosystem, it seems to kind of come down to security. And the ability for Bitcoin to provide security in a decentralized way for transactions, point to point, right, anywhere in the world. And in that sense, I mean, maybe I'm wrong, but I mean, this is kind of, it seems like if Bitcoin doesn't have security, it doesn't have anything. The reason why Bitcoin has come on top is because you trust it the most. Let's say I'm wiring like $100,000, or $1 million someone across the world, and like Bitcoin, am I going to choose like an inferior coin, or am I going to choose the gold standard, right? Bitcoin. Sure. It seems like that's pretty obvious choice to me. I mean, of course, there's other factors. If I want more privacy, maybe I choose a different coin or different. There's obviously a lot of factors, but generally speaking. That concerns me though a lot, because if technology is empowering Bitcoin to provide the most secure network, and that is the foundation in the sense of its value proposition that allows for network effects, adoption, and brand and trust, then I would want to see Bitcoin push the envelope in being the most innovative network, the most kind of like fast-paced changing network. And I don't want to discount the ecosystem on top of Bitcoin. I mean, there are hundreds and hundreds of companies doing amazing things on top of Bitcoin. But my concern is with Bitcoin, the network itself, and meaning if the pace of innovation on the network and how the network itself provides security, how it uses technology to provide the core function of security on Bitcoin itself, if it's not innovating fast enough, it kind of seems inevitable that someone will innovate faster in a different way over time. Give it 10 years or something, and the opportunity will be so big, the motivation, the financial motivation rewards will be so big to try to disrupt, let's say, something like Bitcoin. And what concerns me the most is like Bitcoin motivates mining, the proof of work for miners, which provides the security. But where is the inherent motivation inside the whole master plan of Bitcoin that motivates innovation? It motivates the actual changing of technology of how security is actually provided. I don't see that motivation like written up in Satoshi's white paper or in other type of, core Bitcoin thing. And so I'm like, to me, that feels like the missing kind of component of Bitcoin. If Bitcoin had that inherent motivation to continuously adapt and innovate quickly on new technologies to enhance security, right, in its core network, then I would say, hey, who can beat Bitcoin? But like with that missing, I'm like, that's a tough one. It's a tough sell. What are your thoughts on that?
Yeah. So the lens through which Bitcoiners look at innovation or simply change in the protocol is that it generally trades off against security. So there is not necessarily that much of a positive desire to dramatically tweak the protocol, because changing things is what introduces risks, honestly. And it might seem like a really risk-averse, conservative approach, but the worst bugs in Bitcoin's history have happened when there have been changes that haven't been properly vetted. So, when we were upgrading Bitcoin Core from 0.7 to 0.8, that caused the chain split. That caused the chain to split in half, and it was really challenging to get it back together again. Everybody had to downgrade their nodes at the same time. Now there are systems out there that are good alternatives to Bitcoin that do have this much more aggressive commitment to innovation. They also tend to have more bugs and be less vetted, because you kind of want every line of code to be sort of really locked down, really deeply understood. And if you're cutting out the code all the time, there's a risk you're introducing a bug that no one's aware of that's going to cause rampant inflation in the system or something unanticipated like that. So I think I would just remind you that Bitcoin is really meant to be a monetary protocol. A protocol like TCP/IP or any of these other protocols that are just a description of a way to do a certain kind of action, right? And it's a protocol that can be built on, you can build things on top of it. And if you're changing the underlying, it's like you're building on sand, right? Lightning Network wouldn't work if we were constantly changing Bitcoin. All these settlement networks, second layer networks like Liquid, there's a number of side chains that are being built on Bitcoin. They would be hard to build anything enduring if the foundation was changing all the time. So I'd say if you're going to look for the innovation in Bitcoin, I'd encourage you to look at the upper layers, not just Lightning, but drive chains, systems like Blockstack, which refer to Bitcoin, Rootstock. There's a number of alternative upper layers that refer down to Bitcoin, rely on the security. But so the innovation isn't really happening at the protocol level, because the protocol is meant to be kind of sacrosanct, locked down, secure, very understood. And then, the innovation is meant to happen at kind of the payments layers on top, basically.
Mm-hmm. Yeah. I mean, it's like, I guess, see, that's one of the things that I guess when I look at like the comparison of Bitcoin as a protocol and people compare it to, let's say, TCP/IP with the internet, like I get a bit concerned with that analogy, because I'm like, there's something about, let's say, protocols in and of themselves that don't necessarily get the best valuation. Like, for example, take like, whoever, the SMTP protocol, the FTP protocol, or various protocols in the past, and it's not like the protocol in and of itself is worth a ton per se. It's just an instrument. It's just a means of to communicate, to establish connection, and the value is usually created on top of a protocol. And these protocols, by nature, oftentimes they're disrupted, if they can't keep up with innovation, and oftentimes, they get I guess, developed and enhanced by those players who are using the protocol the most, to enhance and develop the protocols. And if it's too slow, they'll create a new protocol to achieve different, ways to accomplish their purposes. And so in a way, like Bitcoin as a protocol, it's a bit of a bullish or a bearish kind of perspective to me. I'm like, it kind of devalues the essence of what Bitcoin is really trying to do. Like in terms of, like, I don't know, it just seems like Bitcoin is more than a protocol, or it's trying to be more than a protocol. When I hear it's just a protocol, I get kind of like weary of that. I don't know, what's your thoughts?
No, you're right. As I said earlier in the conversation, Bitcoin is a monetary system, and then it's also a settlement system, which is probably what you'd also call a protocol. So it's a means for conveying value through a communications medium with strong settlement assurances, and then it's also a registry of who owns what. It's kind of a file of which coins belong to whom, which addresses have a balance. So it's those two things simultaneously. And we probably should have different words to refer to them, because they're different concepts. They're obviously intertwined, and Satoshi built them to be intertwined. Maybe they can be extricated. Who knows? I think for now, they are likely to stay conjoined. The Bitcoins, the units are going to primarily circulate on Bitcoin, the system. and that circulation will drive fees to the system, and the system's qualities will cause people to own the Bitcoins. But they could be potentially disentangled in the future. Mm-hmm. The other thing I'll say is that Bitcoin isn't completely static. There is a lot of innovation in Bitcoin. It's just there's also a lot of prudence exercised in terms of adding new changes to Bitcoin. And all of the work that you're seeing in the crypto industry generally outside of Bitcoin, it has all been hypothesized and thought about in the Bitcoin context and generally rejected. So the existence of what looks like innovation in other protocols doesn't mean that Bitcoiners didn't think of them. It was just that they chose not to implement them to Bitcoin. Bitcoin hasn't changed much, the protocol, since 2017. There's a new update called Schnorr Taproot, which is going to dramatically increase privacy and improve the efficiency of transactions and make building contracts with Bitcoin easier. So, it does change, to be clear, from time to time, generally in an incremental way, and in a way that's sort of keeping with the objectives of the system, which is keeping the whole thing airtight and not introducing any critical bugs, basically.
Yeah. Yeah. I'm wondering, with Bitcoin, it seems like Bitcoin spends a lot and is largely, I guess, formulated around this whole decentralized kind of value and concept. And I wonder, in some ways, like, can it compete in a world where you have a proliferation of thousands and hundreds of thousands of currencies that facilitate exchange, but do so in a way that's more liquid than ever before. It's cost efficient, and they're more centralized databases. So they don't have the, security costs, the energy expenditure costs of Bitcoin to secure the network. They're a lot more efficient in that sense. One example is, let's say, gaming. You have hundreds and thousands of games that have their own virtual worlds and virtual economies. You put money in and you have this full exchange of goods and services within that economy, and they're able to pull out the money. And it just seems like that's just the beginning. This is just like the first inning of what our future might look like going forward, where you have the complete saturation of digital exchange, right? And the digital exchange becomes super efficient, super fast across what happens, let's say, in a game, in one game, will likely happen across games and across different accounts and apps or systems over time. And when I look at that and I look at kind of what Bitcoin is trying to do, is there really much hope for Bitcoin to become an instrument or even a base layer for mass transactions? And what I mean by this is we have this really fast trend of microtransactions happening online, and just, you have digital wallets, all this stuff. Everything's going digital anyways. This is happening at a super fast pace. In order for Bitcoin to enter that picture and become an instrument where it could be used even as a base layer for everyday mass transactions, let's say 20% of transactions or something, it has to have a pretty fast adoption rate right now, or else it's going to be completely left in the dust. And so I want to talk about this a bit more. Is can Lightning Network, does it have a chance to really put Bitcoin, as a base layer in the picture of main, mass transactions? Does it even have the momentum? I'm looking at some of the stats and I'm fine, it has 30,000 channels and stuff, but what's the latest data on Lightning Network? Is it really exponentially, growing at a pace where there's potential for mass transactions to happen on this?
Oh yeah, Lightning, I would say, is at a state of complexity that's too great for it to achieve, meaningful kind of retail usage or mass market usage. So jury's out on Lightning, but I'm not throwing in the towel yet. But certainly some could say its growth has been disappointing. But I would also say the people that promoted Lightning as an alternative to the kind of Bitcoin Cash vision of Bitcoin as this, retail petty cash brick and mortar payment device. I mean, I think that was also maybe misguided to promote Bitcoin as something that would be suitable for microtransactions. I mean, maybe it will be. My guess is it would be done in a more centralized model where I might use a third-party issuer, and maybe they're issuing notes against a reserve of Bitcoin. I can transact with those notes. I see Bitcoin as primarily a reserve asset, which has really nice auditability and settlement qualities. I don't really see it as a payments mechanism. So I think building towards that vision is maybe, slightly not misguided, but relies on a slight misinterpretation of what Bitcoin's best qualities are. So to me, the success of Bitcoin is not indexed to how Lightning does, honestly. I know it was sold as a bit of a panacea, especially back when there was the scaling debate in 2017. But maybe that's just the case that it was missold. But to address your earlier point, which I thought was really interesting, to restate that, would it be a correct restatement to say, you envision a world where there's much more many more assets are digitized, and there's much more sort of digitally native commerce, and since everything's kind of algorithmic, there's less need for like a bridge currency to intermediate those transactions. Is that kind of the point you're getting at?
Yeah, I mean, I think there's this trend, or what I tried to look at is like kind of the longer trends, let's say 10, 20, 30, 50, 100 years in the past, but also what's causing those trends and how are they going forward in the future? And how does, let's say, Bitcoin, fit into that bigger picture? And one of my concerns with Bitcoin is that I feel like Bitcoin is trying to disrupt money in a sense. It's trying to disrupt kind of the dollar as an asset, or as I say, reserve currency, or gold, right, as an asset, etc. But I feel like in some ways, that stuff is getting disrupted anyways by larger trends in technology, that I fear that Bitcoin is somewhat of a bridge technology. And when I use bridge technology, it's kind of a term that I use for when people try to find a solution for a problem, but that problem is being disrupted by other larger trends at hand. So that problem is actually more of a 5 or 10 year problem, kind of like hybrid cars or something. You're trying to solve the gas mileage problem, but when it's going to be disrupted anyways, or even like you're trying to solve a driving problem. You're trying to help people drive better. That's all a bridge technology, because no one's going to be driving, in like 10 or 15 years. It's all going to be autonomous anyways. So all the thousands of companies trying to improve human driving experience, they're all bridge technologies, and there could be a time where these bridge technologies look amazingly attractive. They look like they're just like the best thing and best investments, and they can have network effects, great profit, trust, brand, everything, ecosystems, but they're still bridge technologies because you can't deny the larger trends at hand. And in a similar way, it's like, and I don't like, I don't like connect with a ton of people on this, because like, this is just something how I view kind of technology in the world. But it seems like the thing that Bitcoin is trying to solve, and they see these major problems, just like, let's say, companies who are trying to solve human driving, make it better. They're seeing, oh, it's so inconvenient, and they're trying to solve it by making the human driver better. I feel like Bitcoin is trying to create a better money, a better money system, and a better asset system, a better reserve system, better gold system. And I'm like, do we really even need that with the larger technologies at hand? Meaning, there's larger trends, and it might take decades to get there, but there's larger trends at hand where everything is being digitized in value, meaning anything of value that you see or you have. Typically in the past, larger things of value have been illiquid. And this has created, I think, in a lot of ways, a need for an instrument for exchange, because a lot of the things of value in the world can't be quickly exchanged. And so I think that's one of the key facets of money. And the thing is, as long as assets are illiquid and they're not digital, we're going to have a need for money, because you need a quicker way to exchange. You need to solve the problem of illiquid and assets that are hard to exchange. But once you've solved this problem, and it's a bigger problem than money in a sense, to actually make all assets like real estate and stocks and everything, your home, your computer, everything liquid and exchangeable digitally instantly with any 2 points in the world. This is the bigger trend that's happening across every segment of our economy. And when I look at this bigger trend, I'm like, what's happening? It's disrupting the very need for money. Because if you have everything digital, then all you need left is you don't need an asset to facilitate exchange. You just need a database to keep track of the different assets. So you just need entries in a database. You don't need assets in the middle to facilitate the exchange. Like, for example, you don't need illiquid assets to go to liquid assets, then to go to exchange. Right? You're cutting out this middle layer completely, and you're saying, hey, wait, all assets are going liquid, digital, exchangeable, instant. Therefore, you can go directly to the database as an entry, facilitate exchange. Therefore, in a sense, the quickest, the most efficient database, in a sense, will have an advantage over time to facilitate the exchange. But it's not really that exchange that will have the most value. It is going to bring back value to the assets itself. So what I see in the bigger, longer term kind of picture is we have a massive reconstruction, redefining of value of assets in our world that we've never experienced before. Technology and internet is doing something that's crazy, right? It's disrupting our entire fundamental understanding of money, of value, of assets, of everything. And I don't think many people are catching the ramifications of this, the extent of it, because I'm looking out. I mean, I don't know. It could take some decades for all of this to play out. But if what I'm saying and what I'm seeing personally happens, I just see the problems that Bitcoin solves or tries to solve in some ways in terms of being a better middle asset in between illiquid assets and, let's say, exchange. I'm saying that's that nature in itself is already being dissolved or resolved. The problem that I see Bitcoin solving that still has long-term ramifications is the decentralized part, meaning avoiding kind of banks, avoiding governments, kind of this rebellious nature of Bitcoin, this revolutionary nature of being kind of an instrument, a system to circumvent kind of current monetary systems or financial transactions. I think that's actually long-standing. I think that's actually going to be an important value going forward for Bitcoin. But when I look at it, I'm like, it seems like it's probably going to be more of a fringe system because all of the trends are leading to more centralized digital exchanges. So in a sense, I'm bullish long-term with Bitcoin in its decentralized kind of revolutionary, rebellious nature of, to circumvent. But I think that it's limited in some ways because I don't think the governments will adopt it, and I don't think it will succeed in its full ambitions of replacing monetary policy in itself. So I don't know. What are your thoughts on all that?
Well, that's a really fascinating vision, especially the notion of sort of having a portfolio of a tokenized, share of your house or digitized. Your portfolios may be some stock, it's maybe your property, might be some fine art, any other collectible, any other item, I guess, that you own, and that's all a highly liquid portfolio. And then in order to consume or obtain something else, you would just exchange a sliver of that portfolio. Is that kind of the vision without needing to go through some intermediary monetary asset in the first place to do that, right?
Yeah, I mean, it sounds kind of crazy because like for example, with art, you'd think the physical art is probably the most important thing, but in actuality, it's probably the rights to that piece of art. In a sense of you could 3D recreate the piece of art actually eventually perfectly, right? So the physical part is not actually the value; it's actually the rights to that creation, right? Of molecules and pixels or in a certain way, and that can actually be digitized, and the rights to that can be digitized, and it could be spread apart. And there's so many ways this stuff can come about. And I'm not saying all this stuff happens in the next 2 years, I mean, it's going to take a while, but these trends seem to be huge trends that it's hard to deny it. I don't know.
Yeah, no, I see the vision. I understand it. I think, I think the vision kind of presumes really seamless interoperation between these financial databases, and that's always been the challenge. And I would say that's where Bitcoin thrives, is in the gaps. It's kind of a weed; it lives in the gaps. So, the barriers to integration occur both at an implementation level. It's hard to make financial databases talk to each other. Maybe we'll get better at it. Who knows? But they also occur at a sovereign level where states impose barriers to commerce, whether it's tariffs or capital controls or sanctions, right? So, there's a lot of reasons why financial databases may not communicate perfectly with each other. And that's where I would say Bitcoin does, its strengths show through. The whole purpose of Bitcoin is settling transactions trustlessly between two mutually untrusting third parties, right? So between people who don't necessarily even know each other, they don't trust each other. I may not know who my counterparty is. I'm just sending value to an address. That's the key value proposition. So if it pertains to cross-border commerce where there's barriers in the established system for whatever reason, that's where it thrives. And if, for instance, the financial system breaks down and it becomes, maybe our financial infrastructure in this country becomes highly politicized, actually we just saw in the news recently Visa and MasterCard pressuring adult websites, or banks are pressuring them via those payment networks. So we see a bit of a politicization of financial infrastructure, which is fundamentally who has database access. That's where I would say, a kind of neutral settlement asset would thrive. So I happen to believe that there's always going to be space for Bitcoin, but it's like I think it's a reasonable point. If the financial system becomes highly, highly efficient, tightly integrated, so that you can effectively engage in digital barter without thinking about it, then there's less of a need for a neutral settlement asset.
Yeah, like it kind of, in a sense, changes the meaning of what we know as money. Like I had this one idea. I was like, this morning, I'm like, am I really going to teach my kids that money has value in and of itself? Like as an asset, like money as an asset class. Because I was thinking about it, I'm like, over time, I think this asset class of money loses its meaning as things become digital and numbers and data. Everything becomes like just a series of digital, transactions stored in computers, and this concept. And it's a hard concept for people to change because it's been with us for thousands and thousands of years, right? Like money has value, it's like has meaning, and I'm kind of glad I haven't really taught much about money to my 6-year-old who's actually turning 6, but I haven't taught much because I've always been hesitant and skeptical to teach my son about money as inherently valuable in and of itself. This power to like do all this stuff just because you have these pieces of paper, you can go out and buy and do all this stuff. I've always been like inherently skeptical of like teaching that as a fundamental lesson of what money is and how you control value in society. And I feel like in some ways I might not have to teach him that because that actually might be changing and adapting, where I could teach my son actually and my kids like value. This is what value is. It has to provide like it's not just. I mean, I could say, hey, money has value in itself because it could facilitates exchange. Like countries, governments use it for some type of reserve currency or reserve value, etc. But I could also share that I think is becoming less and less relevant. And I can direct their attention to things that I think create more value, for people in terms of assets that are, I think, highly more productive than, let's say, a currency or something.
It's a curious idea. I mean, we already have assets that are monetized. They have a monetary premium, so things that people store wealth in that are not money. So at a corporate level, I would say it's treasuries. Treasuries aren't dollars per se, but they are treated as effectively dollar substitutes. And then how do people store wealth in this country? Well, they don't necessarily save with dollars in their bank account, not that much anymore. People will store their wealth and they used to have bond portfolios. Now it's mainly equity. People store their wealth in real estate. So I'd say all those asset classes have a monetary element to them. We also do, alongside that, have, a base money, a few $1 trillion worth of dollars floating around. So I happen to think that money is the lubricant that holds the whole system together. It's definitely not the sole system in which people, actually store wealth for the long term. It's one, counterpart of that interlocking system. My guess is that we're always going to require a bit of that kind of monetary lubricant floating around.
Sure. Like on one note, like, people look at the global real estate market, and some people throw around figures like 200 trillion, et cetera. But my personal take is I think people are undervaluing the global, not just real estate, but land value and resource value in the world. Like, if you just take all the privately owned houses or commercial buildings, et cetera, that is available in terms of data, right, sources, like you might come up with a figure, but there's an immense amount of land, of resources. Like, for example, if the federal government's, or the state governments, right, they've got massive amounts of land and resources, lakes and rivers and beaches and beachfronts and, islands, et cetera, that aren't calculated in that $200 trillion global real estate market value, So,
Right.
like I would imagine, the value of, global land, real estate, resources, et cetera, to be like at least 5 times that amount, in my opinion, 1 quadrillion. And I think when you look at it in that perspective, and then if you take all of, not just the publicly traded stocks, but you also take private companies, right? You're talking about most companies in the world are, small companies that don't get registered as value in any way. But if you aggregate all of those companies together, there are hundreds and hundreds, probably of trillions of dollars in value. And then when people talk about gold as having, say, $8 trillion value, and Bitcoin is trying to disrupt gold, and I get kind of like, I feel like some ways like that's losing sight of the bigger assets at hand. It's like, in my opinion, gold is like, to me, it's irrelevant in a sense. Like, it doesn't mean anything in our larger world. I think it means something in some ways, like as a very, very fringe, tiny asset, like 8 trillion, fine, and quadrillion, couple quadrillion, asset world. But it's like, who stores their wealth in gold? Like, sure, there are some people who might do it as a hedge, et cetera. But, the majority of wealth is stored in real estate and in stocks and maybe bonds and stuff, right? You don't have, you might have people like in more like unstable countries, looking for safer asset havens, right? But like even in that world, it feels like there are a lot of different strategies where, gold might be part of it, offshore like real estate accounts, multiple citizenships, like a bunch of different strategies involved. And I think Bitcoin can actually provide, an attractive, value proposition to those folks. But in the larger sense, for the vast majority of the wealth in the world, 95% or even 98% of the wealth in the world, it doesn't make sense to say, it's worth storing a ton of that in gold or digital gold. Because I'm not seeing the value when you have, like a proven, more historical, timeless value, right, in real estate and stocks that I think have a stronger value proposition. Can you?
It's a good point. It's a good point. To answer your point on gold, I would say gold has much more cultural salience in the developing world, in the post-Soviet Union and places like India, where demonetization is probably more common, and so gold as a household asset is a more normal thing. So yeah, but you're right. Most Americans don't really think of gold as a savings device at all. And that's kind of reflected in its market cap, all the above ground gold, 8 or 9 trillion, not very much. The difference, I would say, or maybe the thing that distinguishes gold, makes it special relative to real estate and equity is, if you're an American, you have access to American public equity, which is great. Really historically performant market. Really great thing to potentially have access to as a savings device. Overseas, it's not as easy. You might be able to, through a local brokerage, get access to, Apple somehow. There's definitely mechanisms to offshore the ability to get exposure to the US equity market, but it's just more challenging and there's more intermediation there. And you can't really directly own the assets themselves. And, property is different. I think property is always going to be the ultimate asset class because you have to live in it too. So that gives it a huge amount of instrumental value. And, there's really great books. One of my favorite books, The Mystery of Capital by DeSoto, talks about how codifying property is the source of wealth in a lot of countries. And certain countries stay poor because property itself is never formalized. It's informal, so you can't use it as collateral. You can't really capitalize the property. So I totally acknowledge that property is probably going to be the major asset class historically and sort of on an ongoing basis. But I would say the thing that's maybe a little special about gold is that you can truly own it. It's no one's liability. The value of the gold doesn't come from cash flows that are owed to you by some third party the same way as stock is. The value of an equity is the ongoing set of cash flows, being produced by the corporation. And there's always uncertainty. Are they going to go out of business? Are they going to be able to execute? Are they going to remain a public company? What are interest rates going to do, et cetera, et cetera? The same with the value of property to a certain degree is the value of cash flows you can potentially expect to derive from that property. So you lease it on, or put it out for rent on the open market. Whereas base monetary assets like gold and potentially Bitcoin, they just have value because we as humanity choose to ascribe a certain amount of value to these non-sovereign assets. So it's kind of circular. It's a little tautological, I would say, but gold has value because there's $9 trillion worth of capital that wants to be outside of the state system, and $9 trillion worth of sort of cultural desire for that thing. And with Bitcoin, the numbers are much smaller, but if it reaches a gold-like status, I'm certainly not going to complain. I think the value proposition is really different for gold versus other capital assets. Gold is the ultimate monetary asset, is the base asset used in all these historical monetary systems.
Sure.
Because it is liability free. And Bitcoin has that same property. The value is only market determined. It's not, you're not exposed to the risk of someone else failing to fill a promise, which is always a risk you take with capital assets.
Mm-hmm. Yeah. So it's interesting because you talk about kind of the value of gold as being kind of this, in a sense, it's this trust in gold over time. I would say it provides, in a sense, an asset to back currency in a way, or it becomes, in a sense, kind of a currency in and of itself too. And historically, that's been, a very kind of timeless a trend. However, as we were discussing before with the digitalization, let's say, of all assets, it seems like that whole concept of needing an asset-backed kind of currency would be disrupted and would become irrelevant over time because you're trading assets directly. You don't need the intermediary. See, the problem is with an intermediary currency is you don't trust it as in and of itself unless perhaps there's some type of backing, whether it's from a country's tax revenues or from an asset like gold or something. The backing helps trust the currency to be used. But that's because you're trading the asset for this middle step that you have to let go of your asset for. That's why you need that trust before there's exchange. But if you get rid of this middle step and you can exchange assets directly, right, all assets digital, liquid, instantly, then you don't need the trust in the middle currency. Therefore, gold becomes irrelevant over time, as does everything else that backs currency. And that's why Bitcoin, it seems like if that's what it's trying to go after, that's actually a big warning flag in my opinion, because it's trying to go after something that's already being made increasingly irrelevant over time. Therefore, you go back to the whole bridge technology. It's trying to solve a problem that's already being solved by bigger trends and technologies. What are your thoughts?
Well, and unfortunately, I have to hop here in a couple
Okay, sure,
minutes.
no
But
worries.
I would also say you might be treating money in a kind of a narrow sense here as solely a medium of exchange. I mean, for sure, gold has value, and so does Bitcoin in terms of reservation demand from being used in a transactional context. But to me, like real merit of gold would be storing my wealth over time in a way that is not, can't be interfered with by the state necessarily if there's a monetary collapse or anything like that, or there's inflation. And, that use case I don't think is going to go away for the simple reason that I don't think nation states are going to stop going periodically berserk. So we're always going to see, Argentina's on its eighth or ninth default now. They're probably going to default again at some point. Currency crises are not going to stop. So even though the Fed has a fairly good track record and the U.S. has never really defaulted on its bonds, that doesn't mean that it doesn't happen elsewhere. So to the extent that the monetary authorities are not perfect stewards of their currency, I think there's always going to be room for a non-sovereign store value, a way to store value over time. So even if, as you say, transactions become much more liquid and all assets become more digitized and you have less intermediation there, I still think there's room for these non-sovereign assets long term.
Got it. Last question. Do you have any, I'd love to talk with some other people in crypto and Bitcoin world who could carry on, some of these discussions, give me some different perspectives. Are there any like super thoughtful people that you would say like, hey, like it would be great for Dave to like, really interact and discuss some of these topics with?
Well, Yassine is great, but you already
And
interviewed.
he referred me to you, so I mean, that's how I got
That's
introduced
funny.
to you.
I often point people in Yassine's direction.
Uh-huh.
He's really, really astute. There's a great crypto analyst at Fidelity called Ria Batoria, who's really, really stellar. I mean, she is obviously works at a big institution, so she might be more limited in what she can say. Friend of mine is a pseudonymous crypto kind of analyst called Hasu. He doesn't do video though because he is a pseudonymous online identity. There's a number of really smart and talented people. I mean, there's some folks that can give the Ethereum point of view, which is a little bit more expansive maybe than mine. I can also come up with a few names and shoot you a note, see what we come up with.
All right, sounds good. Nick, I want to thank you for joining my show here and just for the great conversation. I learned a ton, and I most of all, I appreciate the dialogue. I think Bitcoin is an amazingly important topic to discuss. The ramifications are huge. I have a huge respect actually for the ethos of Bitcoin. That's one of the reasons why I dive into it and I cover it, and I'm open to discussion about it. So I wanted to thank you for just your time. And if people wanted to find you, where can they go to maybe find your Twitter or your website?
Yeah, main place is Twitter. So it's Nic, NIC, 2_ Carter. And then if you want to find all of my work, I put it up as an archive on my website, niccarter.info.
Okay, great. I'll go ahead and add those links in the video description. And thanks again, Nick. We'll talk to you later.
Thanks, Dave. It's been really, really fun.
Awesome. All right, I hope you enjoyed that conversation. If you did, please like the video and consider subscribing to my channel. I'm curious to hear what you think. How does Bitcoin fit into an ever-changing tech landscape? And can it carve out an enduring and lasting future? Please share your thoughts in the comment section below. In my channel, we're looking at investment topics in the world through different angles, trying to dig deeper and into the essence of things. All of my videos are also available as a podcast. Just search for Dave Lee on investing in your favorite podcast player. I'm active on Twitter as well, and my handle there is HeyDave7. We'll see you in my next video. Thanks.